What's going on, guys? It's GBP, baby. Welcome back to another weekly review. It's good to be back. And yeah, let's get straight into things. So we're going to start on the economic calendar. You can see I'm using my FX book, and you'll see that we do have we have news every single day. We do have medium impact news on Monday with the dollar, followed by Tuesday as well with medium impact news, and Wednesday. And then Thursday and Friday, we have high impact news on dollar. So it's looking like quite a nice week. You'll also see there's a lot of news on GBP as well, so we can expect a lot of volatility over there. And it does also look like Euro has a lot going on. In terms of this week, in terms of delivery, I'll probably let Monday trade as per usual. Let it do its thing. With this kind of news, with the speeches and such, not really much tends to happen. But later on in the week, so moving into the Wednesday, Thursday, and Friday, I do believe that's probably when I'm going to be looking for setups and most of my trades to form. But yeah, that's pretty much everything on the news. Definitely keep an eye on them. You'll see there's a lot going on with the Bank of England as well, especially with voting going round and elections, etc. So I can imagine there's going to be quite a lot of volatility over there. And then, of course, jobless claims, which is a personal favorite of mine for news releases, is got on Thursday as well. So that's going to be exciting, followed by the consumer sentiment as well. So a lot to look forward to this week, especially after the massive week we had previously. And now let's head over to the charts. So we're starting on dollar. We're going to start on the monthly, and then we'll simply work our way down the time frames as per usual with our expectations. Now, some of my bias has been influenced by ICT's recent live streams. He was explaining how he's been wanting to see higher dollar, and he was explaining that's because of where we're coming from and where we look like we're trading towards. One thing that I did pay a lot of attention to was the fact that we traded into a bearish monthly order block, and you can see we've reacted off that now. However, if we are to remain bullish, then we should start thinking about this swing high as a potential target. So I'm going to get a few things marked out. We'll get this swing high marked out first as buy side liquidity, and we'll just make that thick. And then I also wanted to bring our attention to a inversion fair value gap on the monthly. So between this low and this high, you'll see there's a fair value gap that we traded through on the downside and then closed on the upside. And then you can see this month already we've traded back into it. Now that's what makes it an inversion fair value gap. Let me just get this delineated like so. What I'm watching now is the midpoint of this inversion fair value gap. If we're to remain bullish, price should stay above this midpoint and we should see support found inside of it. If we're bearish, then price should simply trade through it and use it as resistance. But you can see after last week, we traded right to that midpoint, just trading into that previous month's high. And then moving into the new week, we'll have to see how we trade. But overall, I'm definitely watching this monthly inversion fair value gap to provide support to then, help us with the bias of sending price higher. And as we drop to the lower time frames, you'll be able to see more. So what I mean by that. So let's go down to the weekly. And you'll see how last week we traded deeply into that inversion fair value gap. Again, what's nice to see is that we respected the 50% level. Yes, we wicked through it. However, you can see that we came off of it quite nicely, closing at the 25% level. Another thing to take note of is that we traded into this weekly bullish order block. So again, technically speaking, if we are expecting higher prices, this should act as a propulsion block, sending price higher, which is another reason I'd like to think that we can start seeing continued movement upwards on dollar. Another thing to take note of is the relative equal highs we have here and here. So I'm going to just drag this there like so. And moving into the new week, I would like to think that we can get an up close candle. Now, the reason for that is because overall the bias is bullish in terms of we're moving to higher prices, to a premium, and nothing here has broken. Like there's no clear shift or break in market structure here that would suggest any lower prices. Yes, we traded lower, and yes, we traded deeply into an inversion fair value gap, but we haven't actually disrespected any kind of bullish PD array for us to be bearish, if that makes sense. So that's why I've got my eyes set on this bullish order block to see how we respond off that. And again, I'm going to be watching closely to see if we can step outside the fair value gap to find support on it to again send price higher. You'll also see that the midpoint of this long wick, so consequent encroachment, lines up perfectly with the midpoint of the inversion fair value gap. I'll be watching this level in the new week as a potential low. Preferably price doesn't trade any lower than this. If we find support at this level, it'll be nice because then I'll be more comfortable in looking for longs on dollar with shorts on the pairs to start trading back up inside the range. And again, running up towards this buy side liquidity over here. So yeah, just take note that we are on the buy side of the curve. This was hit This was clearly the sell side. Now this is the buy side. So we should continue to expect price to make its way higher until it reaches its ultimate target of the buy side liquidity and start reaching into this massive fair value gap we have up there. Now, let's say this week we do trade lower and price continues to show weakness. If we lose this inversion fair value gap, so if we trade to the low of it and we start trading outside of it, then and only then would I be bearish, because one would be disrespecting this bullish order block, so we'll be disrespecting bullish PD arrays, and two, this inversion fair value gap should then provide resistance for price. So that's why I'm watching this midpoint very closely, and I'd like to think that it can provide support in the new week to help send price higher. Let's go to the daily, and you'll see how we stepped lower. You'll also see that we failed to take out this swing high right here, which is why I do believe price is going to seek to try and go back up there, and it's created beautiful relative equal highs, and that's where liquidity resides. You'll also see that we traded into a breaker. We have a low, a high, a lower low, and price traded nicely into that and came off it on non-farm payroll. Again, the midpoint of this long wick, which is consequent encroachment, now lines up with the monthly fair value gap consequent encroachment, the weekly consequent encroachment right here. I'll just show you now, midpoint, and now on a daily level it's also lining up with that as well. So there's 3 different time frames, higher time frames, that are showing this consequent encroachment level, which is why I'm going to be paying very close attention to it in the new week for it to provide the potential support. Don't get me wrong, price could run out these lows, but preferably I'd like to think that price can stay above this. So long as price stays above this on Monday and Tuesday, I'd like to think that the low can get made there with higher prices for the rest of the week to start working its way back up into the range. Let's go to the 4 hour just to get a better look at price. Again, there's that long wick. We have a low on a 4 hour basis, so there's going to be liquidity residing down there. Price may want to grab those stops, find support, and trade higher. If we lose this and we do start running for these lows, again, that would show significant weakness, and I'd start looking for these lows to potentially get targeted. But preferably, I'm looking for price to continue to respect this 50% level. So definitely have your eyes marked out, your eyes kept on that level. I'm going to get this marked out on a daily basis just so that we can see it. And as price trades around that level, I'll be watching very closely to see, okay, does it want to provide support? So that's like so. So the 4 hour is the lowest time frame I'm going to, just because it's Sunday and we don't really have much to go off. But moving into Monday, I'll probably let Monday trade, and then obviously we'll have a much better look out on price. The 4 hour as well gives a beautiful view of this buy side liquidity. So we have relative equal highs here and here. So it's going to be nice for price to want to draw up into that, assuming we are still bullish, and again potentially start working its way towards the higher buy side liquidity as well. But overall, I'd like to continue to see upwards movement, even though we had a down week last week, and we should be expecting up green closing candles basically on the weekly basis, because on the higher time frame we're bullish. So that's everything on dollar. Hope that all makes sense. Now let's head over to GBP USD. So we're going to start on the monthly on GBP USD as well. And you'll see how we have actually traded into a bearish order block on an opening basis. So here's the open of a bearish order block, and you'll see we traded into that very recently this month, as we just started that month, and we've come off it now. So in terms of targeting for GBP, where we could start to look to trade to, well, we have this massive wick from April. We can look at the midpoint of that as a target. So let's get that drawn out. And then obviously the low of April as well. But the first target in general is going to be the midpoint, and then it will be this low just below it as well. So let's see if we can get down to that consequent encroachment first, and then we'll see how price treats it. And depending on where dollar and everything is, we can then consider this low to get targeted as well. Let's go down to the weekly, and you'll see how we also traded up on the weekly basis into a bearish order block right here. And similar to dollar, I'm looking at the midpoint of the long wick, because that's consequent encroachment. This is going to be the highest I want to see price trade. Now, when I say this, I don't mean that a price can't trade higher. Obviously it can, and obviously it can, but preferably, and to stay, strong in my bias, it will respect the 50% level and send price lower. So then we can start looking for last week's low, such as here, for a sell side target. And then we'll have this range to start filling in as well. So definitely keep an eye on the consequent encroachments. Again, if we trade through it, that's when it would likely treat it as support, and we will trade higher. But overall, if we're expecting higher dollar, we want to see lower pound. So obviously I'm watching this wick to provide resistance. Let's go to the daily. And you'll see a lot again, 50% of that weekly wick is also 50% of the daily wick, which is nice to see. We traded up into a breaker, high, low, higher high, broken lower. So we traded back into that, and we had a large reaction off that on non-farm payroll. There is still, now this is interesting, there is this high over here, this rejection block level that we've wicked through. I do believe there's still liquidity residing in this range. So I am going to just draw this out because I do believe price is going to seek and find itself inside wicking in here quite a lot. And I'll explain more about that later on as we move through the week, but definitely keep an eye on this range. Again, if we do trade through it, then this will then provide support and we can look for higher prices. But unless that happens, I am going to continue to be bearish with expectation to run for this sell side. And we have a beautiful daily fair value gap lined up with that monthly consequent encroachment right down here. So let's just get that drawn out as well. We'll make that orange. Get rid of the midpoint. And then we'll drop down to the 4 hour as the last time frame to go to. So here's the 4 hour, and you'll see how we wicked up right during non-farm payroll and then traded aggressively lower, creating a bearish order block. So again, we can trade back into this range completely fine. This is that consequent encroachment level I'm going to be watching with an overall expectation to start running lower and look for this sell side liquidity down here to get traded to, and this fair value gap. So yeah, should be quite an interesting week. Again, after Monday, we'll have a lot more insight as to what price is likely to do and what we can expect for the week. But overall, I'm wanting to see lower prices. Oh, and it's the Bank of England interest rate decision on Thursday. I didn't see that. That's interesting. So again, moving into Thursday, depending on where price is, if we're still in a premium, we'll probably be able to get a nice setup with an expectation for price to run lower. But we can talk about that later on in the week. Let's finish up on Euro USD. We'll start on the monthly here as well, of course. Now, Euro's a little bit more ugly, in my opinion. In terms of targeting, we don't have as much of a long wick on the monthly basis for, sell side targeting, but I am still going to get the midpoint marked out because price nonetheless will likely try and trade down there, assuming we're bearish. So we'll get that marked out like so. We'll make it dashed and we'll make it red. And then you'll also see we traded into this, kind of implied fair value gap right here. And you can see we filled that and then traded out of it. So you can see there's only downside delivery here, and we traded into that and came off of it on non-farm payroll. And we also traded into the 50% of this very long wick right here. I'll just show you that now. You can see we traded into that. So although I can't really directly explain what PD arrays these are, you can see there's a level of algorithmic delivery here. It's like this is obviously a key level that price is keying off of to essentially send price lower, assuming we're bearish. So let's drop down to the weekly now. And you'll see how we wicked up into a nice weekly bearish order block. There is a gap here. This is what I mean. When I say implied fair value gap, you can't see it here, but on a weekly basis, you'll see there's a gap because we closed here on week commencing 1st of April, and then we opened here on week commencing 8th of April. So there's a gap right here, and that lines up with that monthly implied gap I was talking about. Now, I can go into more detail about this. Definitely join the Discord. I'll talk more on that. But generally speaking, it's being able to identify things like that, which does help with understanding price in general. But anyway, you can see we traded up into a bearish order block and fair value gap essentially. And again, I'm going to be looking at the midpoint to get respected preferably. So let's get that marked out. And yes, although we've had consecutive green candles, if we're bearish, we want to be looking for down closed candles, right? So that's why I'm looking for this week to be a down closed candle. Even though we're seeing green candles, nothing has suggested bullish price. We're still in a bearish sell program by the looks of things. So we should go in with the assumption that there's going to be a down closed week, meaning that we want to see a high get made early in the week, Monday, Tuesday, Wednesday, and then the rest run lower. So I'm going to mark out the midpoint as a potential high. And then we have a nice, again, these are all implied fair value gaps down here. We can talk more on that later this week. And then that was that consequent encroachment level I was talking about. Let's go to the daily now. Again, the midpoint lines up nicely with the daily wick, so we need to see how price treats that. Now, it is just a matter of waiting in terms of seeing what Monday and Tuesday does, because like I said, the price could trade to it, through it, find support, and then, carry on higher. And if that's the case, so be it. But preferably, we're going to find resistance at these levels. And then after that, I'd like to think that price can turn. We have a nice, and then we can start running down into this range here. I do believe we are going to see some resistance. This kind of price action right here, very ugly, very heavy consolidation. I don't know how price is going to react once it gets down there, but we can think about that once we get there. There's the non-farm payroll traded higher, turned around beautifully at that level. And again, we haven't quite made this a bearish order block just yet, which might hint to potentially more weak price action on euro. So definitely keep an eye on euro, but overall watching this level to provide resistance and then potentially see lower prices. So I hope that all makes sense, guys. Definitely join the Discord. I'll be active in there this week. And yeah, hit the subscribe button. Don't forget to like, drop a comment, and I'll catch you tomorrow. Peace.